Food inflation is already baked in. There's the proof. There's the proof. There's the proof. What you're looking at is the World Vegetable Oils Price Index going back to 1990, a monthly composite of 10 oils that touch nearly everything humans eat. Right now, this index is moving again. If you know how to read this chart, what's coming in the next 6 months is written right in front of you. This index isn't just tracking cooking oil. Vegetable oil is a hidden input in pasta, cookies, chocolate, mayonnaise, baked goods, etc. Vegetable oil is essentially the backbone of all processed foods. When the vegetable oils price moves higher, the effect isn't confined to just fried food. Price shocks cascade across nearly every food category on the grocery store shelf. The 2022 spike had a single identifiable cause. The Russian military operation in Ukraine disrupted Ukrainian sunflower oil, which represented 31% of global sunflower oil production. That was a single commodity shock, painful but containable. What we're seeing now is structurally different. This is an energy shock, a fertilizer shock, and a shipping cost shock hitting simultaneously. Transmitted through the single most important maritime choke point on Earth, the Strait of Hormuz. Here's what most consumers don't understand and what most analysts are underweighting. The prices on your grocery shelf today largely reflect input costs from late 2025. The full pass-through of $100 oil, constrained fertilizer supply, and elevated shipping costs hasn't hit yet. That impact will become far more visible into late summer and fall of 2026. The oils price chart is already telling you this. The market is just slow to believe it. When macro data gets ahead of itself, you look for on-the-ground confirmation, and it's showing up. In March 2026, Indian restaurants began removing fried food from their menus, not as a health initiative, but as a direct cost response to oil prices and scarce LPG. Indian Prime Minister Modi formally asked citizens to reduce cooking oil consumption by 10%. When a government of 1.4 billion people starts rationing cooking oil at the political level, that's not a leading indicator. That's the signal you've already missed. Underneath all of this are three compounding forces. Higher energy costs raise the price of fertilizer, processing, and shipping at every node in the supply chain. Meanwhile, biodiesel now consumes roughly 30% of global food oil supply. And when petroleum gets expensive, even more of that food oil gets pulled into biofuel production instead of food. Biofuel mandates in the US, Brazil, and Indonesia are expanding, meaning the structural diversion of food into energy isn't going to end. So when you look at this chart in 2026, you're not watching a single commodity spike that corrects in a quarter. You're watching a multi-factor inflation surge that hasn't fully arrived yet. The 2022 shock was an event. What's building now is a condition, and the downstream supply chain for everything humans eat is still in the early stages of pricing that condition in. And that is the story of vegetable oils and food inflation, a supply chain that connects Ukrainian sunflower fields and the Straits of Hormuz directly to your grocery bill, with a lot of commodity markets, refining capacity, and policy decisions in between. Hey folks, a quick note on this video. The voice you've been listening to is Brian's AI assistant reading a script that Brian wrote. Somewhere, a large language model is mildly offended that its most advanced reasoning capabilities are being used to explain vegetable oil price trends. But here we are. If you found this video useful, stay tuned. There's more coming.